Newsfirst Newsline with Faraz Ali.
Very good evening to you and welcome to Newsline Zoom in deference to the quarantine conditions of our guest who's complying with the law. That's almost a new thing in Sri Lanka when you get politicians complying with the law. But this one, he's, I believe, always complied with the law. But in between all that, complying with the law and all that, my guest this evening is better known, not by his name, but by a set of numbers, 1990. And thank God for 1990, because if we didn't have 1990 during this pandemic, the problems would have been that much more troublesome, shall we say. So without further ado, great pleasure to welcome on to Newsline Zoom my guest, Dr. Harsha de Silva from the SJB. Very good evening to you, Dr. Harsha.
Good evening, Faraz. Thanks for that introduction, as always.
Now then, the government have just announced a compensation package of 40 billion rupees. That's 40,000 million rupees, isn't it? Well, I mean, isn't this another indication of the wanton waste that's going on in our country, thanks to poor decision making?
Yes, absolutely. I mean, this is completely man-made, or rather, Gotabaya Rajapaksa made. The banning of agrochemicals, in spite of the recommendations not to do so by every expert in the country. He went ahead and did it. In my view, I think it was done to save foreign exchange, because I heard P.B. Jasundara speaking, and he said, look, if we don't import fertilizer and agrochemicals, we may save something like $400 million. So that was a complete ad hoc decision. And look what has happened. There's a massive drop in the harvest. And 40 billion rupees from where? And, it is inconceivable. I mean, it's almost criminal. You see? Yeah.
And then, you say from where is it coming? I put it to you that it's coming from De La Rue, the printing, the mint. That's where they're doing. Whenever they need money, they're just ordering the money. I suppose they must be sending a text message and saying, please send us so much. You think that's what's happening here?
The joke is that they ran out of dollars to bring the paper, to print the money.
Heavens. Have you jokes apart, honestly.
Yeah, jokes apart. It is nothing but just the creation of money. You're right. I mean, every single day, new money is created, because obviously there is no money, lying around to use here. Now, I heard the agriculture minister saying this 40 billion is going to come from the 229 billion earlier allocated for public servants and so on. I don't think that's going to happen. That 229 is also going to be spent. And on top of that, the president had directed the Treasury to release another 93 billion to the Petroleum Corporation. So all kinds of directives being made, and money is being printed to meet this commitment. So this is what we call classic fiscal domination of monetary policy, right? So the Treasury spends and directs the monetary authority, here the central bank, to accommodate the profitless expenditure of the Treasury.
Where is this going to end? I mean, how are we going to start getting dollars into the system. I know that, sorry, I know that there are a fair number of tourists down in the beaches and so on. A couple of weeks ago, the beaches down Welligam and Mirissa, that little stretch there had lots and lots of tourists. Star-class hotels there, selling rooms at $200 a night. They were full one particular weekend. So, they're coming, but obviously they're not chocker. Is that the way? What can we do? What will the SJB do if they face a similar situation?
No. Now, there are multiple questions, all packaged into this one. I mean, you got to, break this thing down into manageable bite-sized pieces to be resolved. Okay. I mean, one is the crisis in agriculture. And even if we pay 40 billion rupees to the farmers, that doesn't mean we are going to have rice to eat. You see, the estimate is perhaps maybe 1 million metric tons of rice may be short this year. That's why we heard that story being floated that the Chinese were going to donate to us 1 million metric tons of rice. By the way, we only use about 2.4 metric tons of rice annually, right? So one is, okay, compensation is one, but where is the rice, right? Then the second thing is, look, they are saying we are going to start paying 75 rupees a kilo for paddy from yesterday, from 50 rupees a paddy, for a kilo for paddy. And at the same time, they are saying, look, we are not going to let the rice prices move up. The simple equation is that there's a formula, 2:1. Essentially, you need, 1.6 kilos of paddy to make 1 kilo of rice, and there are the additional cost attached to it. So if paddy is sold at 75 rupees a kilogram, minimum price of rice should be 150 rupees a kilogram, right? So then you have the issue of, okay, even if, the government is able to purchase some rice, at what price will rice be sold? So that is the basic issue that we are faced with in terms of having food on the table. Now, by printing all this money to pay for, what they have said they are going to, obvious issue is prices are going to rise again because inflation is galloping now. It's 14% based on the National Consumer Price Index, right? And food inflation is some 22%. This is the government figure, but the Bhatkar index is almost double that, which means what's really felt by, people who are actually spending on a packet of rice. So that's one thing. It's about food. Then the next thing is about, other things, other essentials, gas, fuel, coal, all of that, now with electricity going to be, cut. So where is the money for that, right? There are no dollars for that. So that's another issue, right?
But Harsha, sorry to interrupt you, but what can be done in your opinion? What would your advice be given to this government in the spirit of you being a patriotic citizen Sri Lanka? What would you say to them? Please do this. What would that advisory be?
See, since November 2020, I have been saying what we need to do. And I was the first person to have told in Parliament that they should have gone to the International Monetary Fund at the time and, agreed on a program to ensure that our debt was sustainable. And if our debt was sustainable, then our ratings would go back up. If our ratings could go back up, then the closed doors of the international financial markets will open again. So in the short term, for us, there is no other way but to be able to enter the global financial markets and borrow. Right? We have to borrow now. We can't create dollars. Yes, like you said, tourists are coming to Mirissa, but those numbers are still very small, right? That is not going to cut it. But now, whether an IMF program that is going to perhaps be implemented is enough, I don't think so, right? Because the IMF itself is not able to lend to countries whose debt is not sustainable. In our case, in comparison with similar countries, the thresholds on various ratios on debt sustainability, we are complete outliers. You know, we are one of the worst countries in the entire world in terms of interest payment to government revenue, foreign exchange payments, loan payments to exports, etc. Right? So our debt, as it now stands, is not sustainable, and IMF cannot lend to us if it is not sustainable. What does that mean? That means we have to restructure, right? So if they took our advice, 1.5 years ago, this situation would have been different, right? But now it has deteriorated so much. Honestly, for us, I don't think we can come out of it without restructuring. Now,
what do you mean by restructuring? You mean borrow even more and pay the bonds, or to extend the term?
Yeah, I mean, I've spoken about what's called a reprofiling, meaning you just delay the payment, right? You kind of do a debt standstill, right? You say, look, we take a break, we negotiate with private creditors, and then we come up with a plan where we say, look, we will pay everything that is due to you, but give us a moratorium for 36 months or something like that, right? Or else, then the other restructuring is what you call a haircut, in which not only you delay, but a certain amount on the principal and the coupon gets reduced. The creditors, the private creditors, will have to agree to do that. Now, I heard Governor Cabral saying, what are they talking about? We are anyway restructuring. And he says, look, we are, getting swaps and managing the liquidity and making the payments that are coming due. But you're borrowing short to pay long. This is certainly not sustainable, right? So the issue is this for us, whether even if we go for a restructuring exercise now, right, that is sometimes called a debt workout, whether a marginal debt workout or a marginal restructuring would suffice, because shocks are continuing to occur, right? This Omicron thing, I don't know where it's going to end. And a lot of people thought the virus was behind us now. And there are other shocks. So just because you restructure doesn't mean that if we face another shock, that the system will once again, get into real trouble. So restructuring has to be fairly deep, right? Meaning that the economy would be able to sustain shocks into the system in the coming years, right? Which then means that the haircuts that need to be agreed upon would be fairly substantial. Then the question arises, are the private creditors going to say, look, okay, we will take all the pain and let others be paid off the dues without any sort of shaving of what is due to them? What about local players? What about local banks who've invested in dollar-denominated securities and so on? So this is not an easy thing to do at this point in time, right? It is a difficult thing, but in my view, there is no other way out other than to, complete a debt workout.
And on that note, let's go for a break because my very commanding producer says I must go for a break now. So let's go now for a break and have a look at this evening's headlines for the prime time news at 9 o'clock. We'll see you on the other side of the break, shall we?
Newsfirst Newsline with Faraz Shaukat Ali.
I'm in conversation this evening with Dr. Harsha de Silva from the SJB. Now then, Dr. Harsha, the US interest rates seem to be making some movement upwards. Will this complicate matters for tiny little Sri Lanka?
Yes, it will, because, last time it happened in 2013, we call it the taper tantrum and so on. Every time the US increases its interest rates, that has an impact across the world because money flows back to the safe haven currency in the US. So that's going to happen again. Now, the US is running inflation, record inflation, the highest in 40 odd years, right? Which means the prognosis is not only once for us, the US interest rates may be hiked 4 times this year, right? So that is the kind of shock that I was alluding to earlier. So if we are going to restructure, that restructuring must be, deep enough to be able to sustain these shocks that we may have to face. And the biggest one is obviously going to be felt globally, the US interest rate rise.
It's going to. I want to ask you this question. Now, Sri Lanka has had several ratings downgrades. Does this mean that we will be unable to borrow, or are we able to borrow but at higher interest rates, almost as a sort of premium for our official ratings going down?
You see, there are always people who are willing to take risks. There's nothing called we are unable to borrow, right? It is whether we are willing to pay the kind of interest rates that people are going to ask from us. So what happens is a lot of these big funds that borrow or rather lend to us, right, are accepted creditors. They have their own sort of limitations. So they have to manage their exposure to various risk levels. And therefore, when a country's rating falls to below double or triple C, then there are sometimes automatic triggers that they need to exit those investments. So you will then have to find, distress funds, who are willing to lend to very high risk nations like Sri Lanka that is bordering upon default. Now there's another issue, and that is rolling over of money that is invested by local banks in US dollars. Classic case happened 2-3 days ago, in that the central bank attempted to raise $100 million in Sri Lanka development bonds with a upsize up to $250 million. And guess how much they were able to raise? $11.3 million. That's
out of 200.
Out of 200 and 100 to be increased to 250. If there were the kind of demand they expected. So out of the 250, they raised 11.3. So what they did subsequently was they sort of told the banks, look, take it on tap at the average yield that they had determined. So in all, they were, I think, able to raise about 75, taking from the tap. But still, that meant after 240 $2 million worth of Sri Lanka development bonds coming due this year, they could only pick up from the market, after twisting many arms, is 75 odd million, which is not looking good. So there is more coming due. Sri Lanka development bonds in February, $271 million, $473 million in March, nothing in April, $307 million in May, and so on. And in July, we have, as we all know, $1 billion of international sovereign bonds. So when you say, are we not able to borrow? Yes, we are able to borrow. Now, for the 11 million US dollars that they took in, it was around 8%, right? But that is local money, but US dollar money going into the SLDBs. Now, what the central bank has also done in the last couple of days is they have now told the private banks to proportionally lend to the petroleum corporation for their oil imports, which then means already you see 25% of their dollar inflows will have to mandatorily go back to the central bank, right? Now, on top of that, they are going to ask them to lend to the petroleum corporation, who is not a great credit, right? The CPC owes apparently $3.6 billion, according to the statement made by the president's office some time back to the two state banks. So the CPC is already in real trouble, and now the government is forcing private banks to lend to the petroleum corporation, right? Which means there is not going to be enough dollars to go around for private businesses to be able to import their, capital and intermediate goods, right?
Will there be enough money, dollars, to do sort of vanity projects and projects that yield handsome payments to the politicians who will have to sign it off?
I mean, this is where people will have to become really serious now, for us,
Yeah.
What vanity projects? I mean, what are they doing?
Tracks?
It's crazy, there is no priority. The largest amount of money is to be spent on roads. They're carpeting every conceivable road in the country, and they're, spending so much money on roads, right?
But Dr. Harsha, I put it to you that these are necessary implements and tools of the political party that have come into power, and it's a way of them thanking all their little cronies, henchmen, lackeys, whatever you want to call them, for their support during the campaign.
This is another topic altogether about campaign finance and all that. But people must realize that this is our country. That we just have to prioritize what we need to spend money on currently, right?
Is this money only meant to be for the benefit of about 6 people in one family?
I don't know. You see, I was talking about even when that $500 bond was being repaid, right? And other people joined me in asking that same question. People who bought these bonds on the cheap in the secondary market got paid off handsomely. When I say handsomely, some people may have got annualized returns of over 100%, right?
Wow.
In dollar terms, right? So what did that mean? That meant that medicine was not imported, cooking gas was not imported, fuel was not imported, coal was not imported, and so on. But certain people handsomely got handsomely paid off. So it is the same thing here. I mean, at what point are we going to say, look, we have to be mindful about this nation of ours, right? This is not about individuals trying to make money, make hay while the sun shines. Obviously, sun is shining for some people, right? But 99% of the people are suffering. Yeah. So we really need to take stock right now for us. We can't continue this, charade anymore.
What needs to be done immediately? Like in 1 week, what do we have to do?
Yeah, I mean, the way I see it is we need to increase interest rates immediately. The 50 basis point, that is 0.5% increase in policy rates means nothing. Rates will have to rise quite significantly because right now what we are seeing are negative real interest rates, meaning inflation is higher than nominal interest rates. So the bank is paying people to borrow. At that rate, nobody is going to save, right? And if you don't increase interest rates, the support for the currency falls further. Once you hike rates, then you'll have to let the currency find its new equilibrium. This is a joke to say that the rupee is stable at 200, right? The rupee is not 200. Everybody knows that.
245, the curbside rate today.
Yes, I saw Tether, that is cryptocurrency rates for the dollar being exchanged day for yesterday evening at 304, right? So I'm not saying that is the price, but what I'm saying is the central bank has to let the currency find its new equilibrium, right? You can call it a float or whatever, right? Let it depreciate, whatever you want to call it. But if you do it without raising interest rates, I don't know to what extent the rupee will fall, right? So immediately, in my view, what we need to do is to adjust interest rates and then let the rupee find its value. If you do that, right, immediately two things will happen. One is the cost of borrowing locally, right, will increase, which means the exporters would be less incentivized not to bring the dollars back into Sri Lanka. In other words, more dollars will flow back in because it will be too costly to raise money locally to pay the LKR cost. And the other thing is obviously at a market determined rate, remittances will flow back in. You see, the remittances that have fallen by about 40% now on a monthly basis will start coming back. And also, what a lot of people haven't noticed is that in November and December, the central bank had sort of what sometimes is called burned, or rather sold to the market about $600 or $700 million to defend the currency at this silly 200 rupees to the dollar. So
we can't do that, right?
No. So that's what's happening, right?
Right.
So what I'm saying is, if the rupee find its market value, right, supported by a hike in rates that gives it that backstop, then you see there will be some overshooting. Always there's speculation, and people will panic, and the rupee will fall, but then it will rise back up again to a certain point, right? So you have to expect overshooting. Overshooting happens all the time. But what I'm saying is, if they try to float the currency without increasing interest rates, like they said they are going to, or in fact they said we are not going to increase interest rates, we're not going to let the rupee depreciate. That's what they're saying. But that is certainly not an answer. So you asked me what I thought, and this is what I think. So this is just an immediate solution, I think, and then, of course, the many things that I said earlier in the program that we need to do.
Dr. Harsha de Silva, thank you very much for your advisories, for your thought process, and for sharing that with us here on Newsline. Wish you a speedy end of quarantine period.
Actually, let me tell you that I tested negative, so I was never, I had never had an issue, but some family members did. So that is what I was isolating.
Very good for keeping up with the rules. The health authorities will love it, even though you're not a medical doctor. So they'll love it. Thank you. And on that note,
I'm out tomorrow.
Oh, God, you should have come live tomorrow then. Anyway, always nice to have you. And it's now on to the primetime news from News First. Take care. And as always, God bless you all.
Newsfirst Newsline with Faraz